professional speculator does not trade in a chaotic market. He waits with the supreme patience of a master for the rare and fleeting moments of perfect clarity. He is not a gambler, throwing his capital at every passing fluctuation. He is a hunter, a man who knows that the greatest opportunities do not appear by chance, but are the result of a precise and powerful confluence of ideal conditions. The amateur is forever lost in the noise of the market, but the master is listening for a single harmonious chord. Jesse Livermore, through a lifetime of study, learned to recognize this harmony. He developed an unwritten formula, a mental checklist for identifying the highest probability trades, a set of conditions that, when they aligned, formed what we can call the 5-star setup. This is not a simple pattern on a chart. It is a complete, top-down methodology for filtering the entire market. A process designed to ensure that when a speculator finally does risk his capital, the great impersonal probabilities of the market are overwhelmingly on his side. It is the framework that turns speculation from a game of guesswork into a disciplined and scientific business. To understand this 5-star setup is to understand the very essence of Livermore's genius, the secret to the analytical process that preceded his most legendary and profitable campaigns. This video will deconstruct that framework. We will reveal, step by step, the 5 critical conditions that had to be met, the 5 stars that had to align, before Livermore would even consider making a trade. This is a journey from the broadest strategic overview of the entire market down to the specific tactical details of a single stock's behavior. It is a roadmap to the mind of a master, a guide to identifying the very same high-probability setups that he himself trusted. Before we continue, please subscribe and leave a quick comment, even one word. This small action helps the algorithm show this video to more people and tells me these deep dives are worth making. For those who are committed to this journey of knowledge, who return to these lessons to sharpen their minds after the inevitable setbacks of the market, your support is the fuel that keeps this channel going. The entire process, the great foundation upon which the 5-star setup is built, begins not with a stock, but with the market itself. The first and most important star that must be in alignment is this. Star number 1. The general market must be in a clear, confirmed trend. This was Livermore's first and most sacred commandment. He knew with an unshakable certainty that the individual stock, no matter how promising its own story, is ultimately a ship sailing on the great ocean of the overall market. To attempt to sail north in a hurricane blowing south is not an act of courage. It is an act of suicide. He learned through the brutal tuition of his own early failures that fighting the primary trend is a fool's game. He stated it as a simple, almost childishly obvious truth. The thing to do was to be bullish in a bull market and bearish in a bear market. Yet he knew that this was the very principle that the vast majority of traders, in their eagerness for constant action, consistently violated. His first job, therefore, was always to diagnose the character of the market as a whole. Was the great underlying line of least resistance pointing upward or downward? This was a top-down approach. Before he ever looked at a single stock, he looked at the entire market. He was not interested in playing for small, nervous reactions against the primary current. He knew that the big money must necessarily be in the big swing. To capture that swing, a speculator must be on the right side of the market's most powerful, all-encompassing force. No setup, no matter how perfect it may seem on an individual chart, is a valid 5-star setup if this first and most critical star is not perfectly aligned. Now Livermore was a master at identifying that a bull market was underway by observing the tape's behavior, the effect of the market's internal forces. But one of his great contemporaries, Richard Wyckoff, developed a science to explain why this was happening. While Livermore was the supreme speculator, acting on the tape's message, Wyckoff was the master analyst who codified the science of accumulation and distribution, the great campaigns by smart money that create the very bull and bear markets that Livermore so masterfully traded. Wyckoff shows you the engine room behind the market's movements. To see that engine room, to understand the internal mechanics of the market, We invite you to subscribe to our new channel, Richard Wyckoff Trading Methods. The link is in the description below. With the great primary trend confirmed, the checklist moves to the next critical level of filtration. The second star that must align is this. Star number 2. The industry group must be a leader. Livermore knew that a bull market does not lift all stocks equally. The great upward force of the trend is never evenly distributed. It is always concentrated with a ferocious intensity in a select few industry groups. These are the leaders, the generals of the market army, the sectors that are the very engine of the entire advance. His rule was to confine his studies and his capital to these prominent leading groups. To spread oneself thin across the entire market, to have an interest in a dozen different sectors, was to invite confusion and to guarantee a mediocre result. It is much easier to watch a few than many, he insisted. The path to extraordinary profits was through concentration, not diversification. He knew that if he could correctly identify the few groups that were leading the charge, he could safely ignore the rest of the market. He stated it as a fundamental law. If you cannot make money out of the leading active issues, you are not going to make money out of the stock market as a whole. The leading group was not a matter of his personal preference. It was a fact revealed by the action of the ticker tape. The leading group was the one that emerged from a market correction first and with the most explosive force. It was the group whose component stocks were the first to make new highs. It was the group that showed the most consistent and powerful buying. Its leadership was a visible, tangible thing to the trained observer. This second step then acts as another powerful filter. It narrows the speculator's focus from the entire market down to the single sector where the greatest opportunities reside. It is a process of radical simplification, of ignoring the 90% of the market that is mediocre to concentrate on the 10% that is truly dynamic. Only when a stock is a member of one of these powerful market-leading groups can the second star of a 5-star setup be considered in alignment. Having completed the first 2 great strategic steps of the 5-star setup, the speculator has achieved a level of clarity that eludes the vast majority of market participants. He has confirmed that the great primary tide of a bull market is at his back, and he has identified the single strongest fleet, the leading industry group, that is sailing most powerfully upon that tide. He is no longer lost in the vast, confusing ocean of the general list. His focus is now concentrated, his purpose clear. But the test is not yet complete. The next steps are the most refined, the tactical maneuvers that narrow the focus from the leading fleet down to the single flagship, and then to the precise psychological moment to board her. This brings us to the third and most crucial star in the alignment, the final filter of selection. Star number 3. The stock must be the leader within its group. This is the step that separates the good from the truly great. Even within the strongest and most dynamic industry group, not all stocks are created equal. There will always be 1 or 2 undisputed generals, the true leaders that move first, advance fastest, and demonstrate the most profound and resilient strength. The other stocks are mere soldiers in the ranks, following the commands of their leaders. The professional speculator is interested only in the generals. The amateur, in his perpetual and misguided quest for a bargain, almost always makes a fatal error at this juncture. He sees the leading stock, which has already had a substantial advance, and he deems it too expensive. He looks instead for the laggard in the same group, a stock that has not yet moved, and he buys it, believing it is a safer and more logical purchase. He thinks to himself, this stock is in a strong group, and it hasn't moved yet. It is due to catch up. This, Jesse Livermore knew, was a profound and fundamental misreading of the market's language. A laggard is not a bargain, it is a weakling. Its failure to advance in concert with its stronger brethren is not a sign of a pending opportunity. It is a profound and glaring warning signal. It is the market's own clear announcement that there is some unseen internal flaw, some hidden source of distribution, or some fundamental problem that is preventing the stock from participating in its group's prosperity. Livermore stated it as a core principle, learned through years of costly experience. Experiences had taught me to beware of buying a stock that refuses to follow the group leader. The professional does not buy weakness hoping it will turn to strength. He buys proven, demonstrated strength, and he is willing to pay a premium for it. His task is to identify the leader. The leader is not a matter of opinion, it is a fact proven by its behavior on the tape. The leader is the stock that moves first. It is the one that makes the largest percentage gains on the highest volume. It is the one that acts right. It absorbs profit-taking with an ease that is almost contemptuous. It feels strong, vital, and alive. It is the stock that everyone is watching, the one that is making the headlines. Livermore's great campaign in the steel stocks during the war boom was a perfect illustration of this principle in action. He was bullish on the entire group, but he did not buy all the steel stocks equally. He began by testing both U.S. Steel and Utah Copper. From the very first day, U.S. Steel acted like a true leader, moving with power and purpose. Utah Copper, in contrast, was sluggish and unresponsive. Heeding the tape's clear verdict, he concentrated his full financial firepower on the proven leader, U.S. Steel, while leaving the laggard alone. This single, disciplined decision was the key to one of his most profitable campaigns. The cautionary tale of Chester Motors serves as the negative example. While the entire automobile group was soaring in a great bull market, Chester stubbornly refused to advance. The public, seeing it as cheap, began to buy it. Livermore, reading the tape, saw its weakness not as an opportunity but as a definitive sell signal and went short, profiting handsomely when the stock's internal problems were finally revealed. He had obeyed the third great step of the test. He had shunned the laggard and in this case bet against it. With the undisputed leader of the leading group now clearly identified, the test arrives at its fourth and most psychologically demanding star. Star number 4. The stock must be at a pivotal point. This is the great and final challenge of the analytical phase. The speculator now has the right market, the right group, and the right stock. But all of this brilliant work is for naught if his timing is flawed. To be correct in your analysis but premature in your action is to invite a slow and agonizing financial death. You will be whipsawed by meaningless fluctuations, your capital and your nerve eroded long before the real profitable move ever begins. Livermore knew more than any other trader that timing was everything. He wrote, "Much depends upon beginning at exactly the right time. It took me years to realize the importance of this. It also cost me some hundreds of thousands of dollars. The amateur is consumed by impatience, by a frantic need to be in the market. The professional, in contrast, must cultivate the supreme and difficult art of waiting. He must sit, sometimes for days, sometimes for weeks, his capital held in reserve, until the market itself gives the final, unequivocal signal that it is ready to move." This signal, for Livermore, was the decisive breach of a pivotal point. This was his psychological moment, the point in time and price where the long period of quiet preparation was over, and the public marking up phase was about to begin. For the speculator following this plan, the simplest and most powerful pivotal point to watch for is the moment a leading stock makes a new high after a period of consolidation or a natural, healthy reaction. It is only at this precise juncture, and not a moment sooner, that the first commitment should be made. His legendary campaign in Bethlehem Steel was the ultimate testament to this discipline. For 6 long weeks he watched the stock climb, his bullish conviction growing stronger with every passing day. He saw it move from the 50s to the 80s to the 90s. Every point of advance was a siren's call to his impatience. The amateur would have jumped in a dozen times. But Livermore waited. He was not interested in the preliminary skirmishes. He was waiting for the main event, the signal that the great public advance was about to begin. That signal for him was the breach of the great pivotal point at $100. The moment it was crossed, he acted, and in doing so, he entered one of the greatest trades of his career. This is the great challenge. To sit idly by, to watch a stock that you know is a leader climb higher and higher, requires a level of self-control that few possess. But it is this very discipline that separates the professional from the amateur. The professional is not paid for trading, he is paid for being right. And being right requires waiting for the one single moment when the probabilities are overwhelmingly in your favor. With the completion of this fourth step, the entire analytical phase of the campaign is over. The speculator has successfully navigated the great, top-down filtration process. He has confirmed the primary trend of the market. He has identified the leading group. He has selected the strongest stock within that group. And he has had the supreme patience to wait for that chosen stock to arrive at its own perfect psychological moment to act. He has now done everything in his power to tilt the odds in his favor. He is now and only now ready to proceed to the final tactical star of the setup, the execution and confirmation of the trade itself. The speculator who has patiently and methodically navigated the first 4 steps of this great test now stands at the final threshold of action. The strategic stars have aligned. The great primary trend of the market is in his favor. The tactical stars have aligned. He has identified the leading stock in the leading group, and that stock has now arrived at its own perfect psychological moment, the pivotal point. The setup is almost perfect, but the master speculator even now does not act on a 4-star signal. He demands one final, irrefutable confirmation, the market's own great roaring endorsement of the move. He waits for the 5th and final star to align. This brings us to the ultimate confirmation, the signal that transforms a high probability setup into a near certainty. Star number 5. The breakout must be confirmed by a surge in volume. This is the final and most crucial piece of evidence. A price movement in itself can be deceptive, but a price movement accompanied by a dramatic and powerful increase in trading activity is a statement of undeniable truth. It is the market speaking not in a whisper but in a thunderous chorus. Volume is the great engine of any market move. It represents the force, the power, and the conviction behind the price. A breakout that occurs on a quiet, low-volume day is often suspect. It suggests a lack of broad participation, a flimsy, half-hearted move that can be easily and swiftly reversed. It is a house built on sand. But a breakout that occurs on a sudden, explosive surge in volume is a house built on a bedrock of immense and aggressive demand. Livermore knew that this surge in volume was the final, critical sign that a broad and powerful consensus had been reached. It was the signal that other great market participants, the floor traders, the public, and perhaps other informed interests, were seeing the same thing and were acting on it with force. It was the market's own way of endorsing the move, of providing the great propulsive thrust necessary for a sustained and powerful advance. The breakout in price was the signal, but the surge in volume was the signature that proved it was genuine. This then is the complete 5-star setup, the great and timeless pattern that Jesse Livermore trusted above all others. It is not a simple 2-dimensional pattern on a chart. It is a multi-dimensional, logical, and sequential process, a complete campaign plan that moves the speculator from the broadest strategic overview down to the finest tactical detail. It is a journey of filtration and confirmation, a method for ensuring that when you finally do risk your capital, the great impersonal probabilities of the market are overwhelmingly on your side. Let us synthesize it into a single cohesive process. It begins with star number 1, the general market trend ensuring the great tide is at your back. It moves to star number 2, the leading industry group, ensuring you are sailing in the fastest current. It narrows its focus to star number 3, the leader within the group, ensuring you are on the fleetest ship. It demands the supreme patience to wait for star number 4, the pivotal point, the perfect moment to board. And finally, it demands the ultimate confirmation of star number 5, the surge in volume, the great roaring engine that signals the voyage is truly underway. To follow this 5-step process is to understand that the 5-star setup is not merely a technical pattern. It is a mental discipline. It is a commitment to the difficult and often frustrating art of waiting. The 90% fail because they are content to act on a 1-star or 2-star signal. They are driven by impatience, by the constant nagging need to be in the action. The professional, the 10% who win, has the ironclad fortitude to sit in cash, to watch, and to do nothing, until all 5 stars, without exception, have perfectly aligned. The 5-star setup, then, is the ultimate key to transforming speculation from a frantic, emotional gamble into a calm, disciplined, and pro-business. It is a methodology that, by its very design, eliminates the 2 greatest sources of amateur ruin: acting on impulse and fighting the primary trend. It is a plan that forces a speculator to be patient, to be selective, and to act only when the evidence is irrefutable. It is not a guarantee of profit on any single trade, for speculation can never be made entirely safe. But it is the closest thing a man can get to a guarantee of long-term, consistent success. It was the foundation of Livermore's greatest victories, and it remains the only true path for the speculator who is serious about his craft. To truly understand the mind that forged these principles, it is not enough to simply know the rules. You must understand the man, the very soul of the speculator. For this, there is no greater journey you can take than to immerse yourself in Edwin Lefebvre's 1923 masterpiece, Reminiscences of a Stock Operator. This is not a dry textbook of market theories. It is a deep psychological odyssey, a flight simulator for the trader's mind. Lefebvre's genius was not just in telling Jesse Livermore's story. It was in capturing his internal monologue, the constant churning dialogue of doubt, of conviction, of fear, and of the brilliant flashes of intuition that defined his career. Reading it, you do not just learn his methods. You feel the gut-wrenching pain of his million-dollar blunders and the quiet, profound satisfaction of his greatest triumphs, all without risking a single cent of your own capital. For those truly committed to this deep study, we highly recommend the edition, which includes a unique, detailed chapter-by-chapter analysis by Max Davidson. This analysis acts as your co-pilot, translating the century-old wisdom of the text into a clear, actionable roadmap for the modern trader, ensuring that the lessons learned in 1923 are as powerful and as profitable today as they were then. A link to this essential edition is provided in the description below.